Over the past 2 weeks, I've been selling all my individual stocks as they hit break even, and I think you should do the same. But why? Let's go back and have a look at a realization I had a couple of weeks ago. So there I was, just on my computer looking at my investments. A few were up, a lot were down, but I wasn't worried. Sure wasn't. I wasn't worried because I had done my research. I watched loads of YouTube videos. I knew that you shouldn't let your emotions influence your investing. You gotta hold/hodl depending on your field of investing. Diamond hands, not paper hands. All that stuff that gets thrown around constantly. So hold I would until... Until what? Yes, I was investing for the future, 5, 10 plus years away. But even when I got closer, how would I know when to sell? The short answer is, I didn't. So let me ask you a question. When are you selling? Do you have a price in mind? What is this price based on? It definitely wouldn't be an arbitrary number that you picked out of thin air now, would it? Perhaps you have a rough year or time horizon when you plan to sell. Say in 5 years. Is there anything specific happening in 5 years, or is it just a random number? I think people tend to look a lot into when they're buying a stock, but barely at all when they're looking at selling. They'll get out their chart and draw 23 different lines on it and call it technical analysis. And say, I have found the optimal point of entry. Or maybe earnings in a company have just come out, and it wasn't what they expected, and the stock's dropped by 20%. And you're buying it up because you think, wow, this is so undervalued. Okay, sure, it might be undervalued. But in order to know if it is undervalued, you would have to know its value, its fair value. Makes logical sense, right? But do you know how much this company should be fairly valued at? How did you work it out? Well, I certainly couldn't answer any of these questions. Sure, I researched the company and I knew what they were doing and I knew what their rough business model was. But if I'm being completely honest with myself, I don't think that I knew enough or did enough research to warrant investing into it. This resulted in me having a stock portfolio full of stocks that I didn't have 100% certainty on, and with no clear sell point on any of these stocks. So now part of my new philosophy is if you don't know when to sell the stock, you shouldn't be buying it. This realization was partly fueled by fellow UK YouTuber Sasha Jansen. I'm very sorry if I butchered the name. He makes investing and finance videos as well, and in my opinion is probably the best UK YouTuber relating to that field out there. He really knows his stuff. He has a series of videos where he goes through the models he uses to calculate a company's fair value and then what he expects it to be in the future based on the company's growth. There's definitely more to it than that, but that's my summary. Now let me show you a little extract of my price prediction model. It is quite advanced, so if you're not degree educated then you might struggle to follow it, but do your best. So climate change equals bad. Obviously. Greta Thunberg equals good. Bad equals fossil fuels, but good equals electric. Therefore, electric doesn't equal bad, and so therefore, Tesla equals electric. And as we know, electric equals good, then Tesla equals good. Therefore, Elon, take my money. Okay, I don't actually do that, but my point is, I think that I should have some model or some form of working out a price prediction for a stock in order to dictate when I buy and when I sell it. And I'm sure there's many different ways to do this other than the way Sasha has done it, but that one just really resonated with me. Now currently I don't have the knowledge or the time to progress my learning in investing to a place where I would feel comfortable going through a thorough price analysis and price modeling. I'm just not there yet, and that's okay. I'm sure about 80% plus people are in the same boat as me. They don't really have the right knowledge to be doing this. Knowledge! But they're learning, and that's good. Be honest with yourself and think about if you really have the knowledge, the skills, and the experience to be competing with people that literally analyze stocks, predict their prices, do price modeling as their full-time career. Like that's their only job. Let's use a little analogy here. Let's say you were a new farmer with no experience, and you were looking to buy a field to plant some crops in. You have 20 fields to pick from. How confident would you be that you would pick the correct field that had the right type of soil, good drainage, the right soil nutrients that is accessible? Not that confident, but I do think I could do a great Somerset farmer impression. Want to hear? I'm a farmer down in Somerset. I'm gonna stop you there. Probably not very confident. What if I gave you a couple of days to do some research? Well, I didn't find much about fields, but I did improve my Somerset farmer accent. Here we go. My tractor's not working properly. Stop with the farmer impressions, okay? Well, a normal person would probably say that sure, they'd have a bit of a better idea, they might identify some things, but there would certainly be a whole lot of factors that they would miss. Now, if we compare that with a farmer with 30 years of experience, he's been doing it his whole life, who has bought hundreds of fields, planted hundreds of crops. I think we could both agree that he would probably have the better chance of picking a field that would work well for the crops he was planting. The same applies with stock picking. Sure, you could always pick a field that does well, but how much of that would be luck-based versus skill and experience-based? So am I saying you should never own any individual stocks? No, I'm just doing what suits me best at this current moment in time. And I'm sure in the future I will dabble in individual stocks again. But here is what I would do differently. First, I would start with only allocating 5% of my portfolio to individual stocks. Second, I would want to make sure that I had a really good grasp of the company's fundamentals, as well as having a price modeling prediction for where I think the stock's going to go, so I would have a point at which I would sell. Now, I wouldn't expect to be right first time, but I would expect to put some time into it and really learn how to do it. This would mean in the future, if I did decide to increase my position sizes, then I would feel a lot more confident and would have the experience to do it. Plus, even if I do it all wrong, as it's only 5% of my portfolio, the monetary loss versus the educational gain from this experience would be heavily weighted in my favor. Now here's a little checklist for you. I need you to be as honest as you can with yourself here, which is a very difficult thing to do. It can be very difficult to admit you've bitten off more than you can chew, but if you manage to do that, it will help you in the long run, so do your best. Firstly, how thorough is your analysis of companies you've invested into? Have you just done it because you've seen it online, or have you truly conducted a proper analysis? Number two, do you have an entry and exit strategy that's based on data and not just random numbers? Number three, are you truly educated enough to do this? Do you have the required knowledge to do this properly? Answer these questions and then you will know if investing in individual stocks is right for you at this moment in time. If you've come to the conclusion that it's not right for you at this time, then congratulations. You've saved yourself a lot of money in the future, at the expense of your ego though. But from here, I would advise that you start selling your stocks as they come into the green, and then start to rebalance your portfolio gradually. Once you've done that, you'll probably be looking for some good ETFs to invest into. So check out this video here where I go over my ETF portfolio.